lender told me not to close any of my credit card accounts. I was kind of startled by the number of accounts my husband had open. How do I get them off my report? Look, if they're open, you want to let them age off of your credit report. That's the most ideal way, because when you close them, automatically you are saying to the credit bureaus you have less amount of available credit to you, and it hurts your overall credit score. So credit is based on how you make your payments, the length of time, and how much you can borrow, right? So how much available credit is available to you, and are you overspending or not? So when you start cutting that dramatically, you actually start eating into your credit scores. Not to mention, those accounts no longer report on a monthly basis in your benefit. So definitely just let them age out. Your loan officer is telling you this so it doesn't impact your credit score. But yes, we find out all kinds of fun things about our spouses every time our credit reports are pulled. I'm so sorry you had to find out this way. So Devin says, if I live in a primary single-family dwelling, looking to buy a new house or rent the old one, how does that affect my debt-to-income ratio? So they've changed the rules on this recently. And so typically right now, if you're going to rent out the home that you're going to be vacating, instead of being allowed to use the rental income to offset, in terms of additional income, they only allow you to offset the payment at 75% of whatever your rent is. Okay, so I'm going to use basic math numbers because it's end of the day, guys, and sometimes I really stumble on these things. But let's assume your rent is $1,000, your mortgage payment is $500, right? We would use $750. In the past, I could use $250 as income. Now I cannot. I can just use it to wipe out the $500 debt payment. So it does give you some more bandwidth for purchasing power. But what stinks is you can't use that additional rent cash flow to help you bump up your purchase price. How hard is it to get financing while relocating? Here's the deal. In this marketplace, I will tell you that the average turn time right now is 290 days. So we're talking about 6 to 9 months. I know that there are some cases where people are finding property right away, but if you have any kind of obstacles relocation, you might as well get started sooner than later. One of the things that you're going to have to be prepared with is letting them know where you're getting a job, right? A lender is going to want to know that you have an employment letter or a job that's secured with a start date and a pay rate. You'll want to close within 30, as some lenders do 60 days from your first payment date. So you just want to make sure that all of those ducks are in a row for the lender. Now, sometimes people are but I don't want to look for a job until I get there. That doesn't really work that way. Yes, people can get through it. They qualify as a second home or an investment property, but you are signing documents verifying your occupancy at close. So what would you give for people that are relocating, because you deal with lots of out-of-state clients?
Yeah, so I would definitely say get started earlier. Sooner the better.
So what are your best tips? So let's say somebody's moving from New Jersey, right,
Yeah.
to Arizona.
Mm-hmm.
What would you tell them? One, they probably don't know the area.
Right. So you definitely want a real estate agent who knows the areas and knows what you're looking for. You need to have a consult with them and be able to hone in on what you're looking for so that they have a really good idea, because you're going to be doing a lot of probably virtual tours. At least that's what I do. So that you can not be there, but be there at the same time. There are a lot of agents out there who have handed keys that the person has never even seen the home before they walk into it with the keys. So
definitely for you, one, work with an agent who really understands the type of property that you're buying, a lender that understands the type of property that you're buying. And I would do the due diligence at minimum 6 months in advance. Get your employer locked in, do your property tours, do your, traveling to that area, whatever you need to do. But it is going to take some time. And you might even move here and be in a short-term rental or an Airbnb while this entire thing is happening. So Jessica asks, thanks for taking my question. I'm trying to decide between FHA and a conventional loan. Which do I prefer? So I will say this, and this is just general, okay? So like loan amounts vary per county, loan amounts vary per debt to income ratio, income calculation, you name it. But generally speaking, if you have a 680 or less FICO score, typically FHA is a more affordable loan product because of rate and because of mortgage insurance. So I generally like to have that as be one of the loan scenarios that we provide to a client. Conventional loans in this marketplace seem to have a more competitive edge. Sellers believe that those buyers are way more qualified. And, there are less stipulations in terms of like, you don't have to paint like a house that has chipping paint. Or, there aren't as many concerns with like things like termite or broken windows. So there are some benefits with going conventional. You do pay significantly less though if your credit score is above a 720 on a conventional loan. So it is, and like I said, this is typical answers, not specific. So you definitely want to get both as a side-by-side comparison when you're making a decision. Ooh, this is a good question from Devin. It says, what's one thing you wish your clients knew more about in your respective lines of business? For me, in general, I think that real estate, unfortunately, has the lowest bar of entry. Now, I'm grateful for that because, guys, like I told you before, I'm from Nogales, Arizona. And if it didn't have such a low barrier of entry, I might not be able to be where I am in life today. That being said, I mean, not everyone is going to be as researched or like I try to make the most out of this opportunity. I want to help the most people, and I have taken this job super seriously. I study guidelines, I memorize guidelines, and I fight hard for all my clients. So I feel like I maybe am an anomaly, when it comes to like the 500,000 people that do loans. And I'm not saying that I'm the only one, but I'm saying I don't know that many people in real estate in general and loans take this job as seriously as they should. And because they don't, you can mess up a person's life. Like I got qualified for a 2-year ARM, interest only at 23 years old, and I definitely did not I qualified, but I shouldn't have bought, and I got shit financial advice from somebody who had shit finances, and it literally ruined many years of my life. Like I'm grateful for that mortgage, but I'm like sad for my 20s. I couldn't do anything because of that, and I feel like I wish people knew how little people know that are helping them with real estate and loans.
Yeah, I agree with that 100%. And I see transactions go through all the time that I'm like, how does that person go to sleep and have a clean conscience at the end of the night? But certainly, I mean, I think it comes down to, just like we said earlier, working with somebody that absolutely knows what they're doing, because you know what you want in a house, you know what you need, you know what's a good fit for your family. It's our job to make sure that all the contractual stuff is taken care of, that your money and that your asset is never in jeopardy. And as far as like financials and valuations, I wish that people knew that Zestimates didn't mean anything. Actually, now that I started talking, that's what I want. I wish that people realize how bad Zestimates are.
And you know what? They won't realize how bad Zestimates are, because Zestimates right now, I mean, like, it's just taking an average of everything that's selling for crazy prices right now.
Always make sure you know what the objective is when you're talking to somebody across the table from you. Just remember, Zillow buys houses. That's all I have to say about that. Okay. Zillow buys houses, and I'm pretty sure that Zestimate is affected slightly by that fact.
Well, it gives them their leads. It definitely gives them their leads.